Hey everybody, I'm offering some stock picks for this year. Things that I'm personally going to invest in that I think are going to have a great year in 2025 and beyond. Uh, Obviously, not every stock I'm going to talk about is for everybody. I'm going to talk about my best cheap stock to buy right now. Before I dive in, please take a minute and check out fool.com/Frankel, the link you see on your screen. Get 10 free stock picks right now from the Motley Fool. With this offer, it's the best way to support this work I'm doing on YouTube. Again, fool.com/Frankel for 10 stocks to buy right now. So let's go ahead and dive right in. The stock I'm going to talk about is SiriusXM, the satellite radio company. Ticker symbol is SIRI. This is not a great performing stock recently. It fell by 60% in 2024. There are some good reasons, and we'll get to those in a little bit. And it's a favorite of Warren Buffett lately. It's up by Buffett owns about 35% of it. So I'm going to talk about a few things here, and I'm going to share my screen. 3, 2, 1. So as I mentioned, SiriusXM was down 60% in 2024. Berkshire Hathaway owns 35% of the company, and it has a legal monopoly on satellite radio. To be fair, there are some good reasons the stock is down. Revenue has been essentially flat since 2021. It's actually expected to decline a little bit in 2025. And the subscriber base peaked in 2019, and it is about 5% smaller today, and hasn't retaken it. It doesn't look like it's going to anytime really soon. But there's a lot to like about this business, and I'll go through some of this in more detail in a minute. It's a highly profitable company. It's the only satellite radio operator that's of note in the United States. They're doing a great job of cost savings. They're targeting $200 million of annualized cost savings starting this year. There's a potential tailwind if new car sales pick up. If interest rates fall over the next year or two like they're expected to, new car sales are, that's Sirius's focus, is maximizing its business from, installing its product in new cars. There's also a lot of potential to unlock from the advertising side. Sirius makes a lot of money from advertising through its own platform and Pandora, which it owns. It trades for just 8 times forward earnings. And I want to share something from their presentation. Bear with me for 1 second. So they see a path to get to add 10 million subscribers, which would be more than they ever had before, and to grow free cash flow from $1.2 billion to $1.8 billion. There's a few different ways that they are going to get there. I mentioned, for example, the ad-supported products. They rolled out a new ad-supported product here. It's free. It's compatible with certain types of in-car radios, and it's completely funded by ads. Netflix is one example of a company that's had a lot of success with the ad-supported model. They have 70 million people on some form of ad-supported Netflix. And I'm not saying Sirius is going to be the next Netflix, but this could definitely unlock a lot of hidden potential in the business. A bunch of some new pricing structures, alternative subscriptions. For example, they rolled out a new 3-year vehicle subscription option for new cars that could not only boost their revenue but boost visibility of future revenue. You can read through this. This is a presentation on their website, but they're offering a bunch of different packages. You can the pricing and packaging section on the bottom of this slide. Pricing for streaming only and in-car begins at $9.99. It makes them much more competitive with other streaming subscriptions. I mentioned the 3-year auto subscription. They just added Toyota to that product. They're growing their podcast content. There's a lot of different ways that Sirius is trying to do a better job of monetizing their platform. They gave an update on their strategy in December, and there's a lot of interesting things here. This details how they're going to, double down on their core automotive subscribers, which is by far the strongest part of their business, and what keeps them, the most future revenue visibility comes from that part of the business. The advertising part is really where I think is going to take the company to the next level. It already has a lot of ad-supported audio, but there's a lot more room to monetize, and especially like I mentioned, the free ad-supported tier. A lot of people don't have Sirius in their car because you'd have to pay for an active subscription. The free ad-supported tier has a lot of potential as well, and a lot of balance sheet things that they're going to do. Three things they want to do is to continue to deleverage the balance sheet. They want to reduce its debt load by $700 million this year alone. They plan to maintain their dividend. A lot of people are worried they're going to cut the dividend. Sirius, a lot of people don't realize, is a high dividend stock. And they're buying back stock. And with the company trading for 8 times free cash flow, it's really not surprising that they are going to spend excess capital on buying back stock. So I think there's a lot to like about this business. It could take a year or two before everything's really reflected in the numbers. But this is a cheap stock. It's a profitable stock. It's an industry leader. There is a lot to like about it. I'd love to know what you think about Sirius. If you think I'm going to be making a good move when I buy this in a week or so, I'm going to wait for publish this video, then wait a few days and then buy. But let me know if you think I'm making a good move or a bad move. I'd love to hear what you think, and I'll do my best to answer everybody individually. And thanks for listening.
All right, so just to give you all a little bonus, I want to talk about some of the other stocks that I think are really good bargains right now. I did a whole separate video on these 5 if you want to check it out. But just to kind of quickly run them down, one is Realty Income. I think real estate investment trusts are very cheap right now, and Realty Income is one of the best ones you could buy in the market. Ally Financial is my top bank stock to buy for 2025. I just recently did a full video on that if you want to check that out. Dreamfinders Homes, I think as mortgage rates come down, the housing market is going to rebound very fast in 2025, and this is my favorite way to play it. Vici Properties is another real estate company. They are a casino owner. They own a lot of gaming properties, great tenant quality, long-term leases, inflation protected, and has been beaten down because of the interest rate environment. And last but certainly not least, Redfin, which is the most speculative stock on my cheap stocks list. It's not for everybody, but if the housing market recovers, this could be a big, big winner.
I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investments. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market more than 5 times. Go to fool.com/Frankel to get your 10 stock picks now. The Motley Fool Stock Advisor returns are 914% as of January 7th, 2025, and are measured against the S&P 500 returns of 174% as of January 7th, 2025.